Welcome back to Unfoolish Investing, where we take deep dives into market history to help you become smarter and a more patient investor. I'm Victor, and today we're looking at one of the most notable streaks in market history, the 1978 slide. Now, I know we've seen all the markets stumble at times, but a 9-day losing streak, we're going through it. Looks like we're in an update today. That'll turn some heads. So what caused it? What happened afterward? And what lessons can we learn as modern investors? Let's break it down. The economy in 1978, let's just understand that a little bit. It was pretty tumultuous. The U.S. economy was caught in what we want to call stagflation. Now, what is stagflation? It's a nasty combination of high inflation, where prices were rising at alarming rates, sluggish economic growth, business struggled to expand, and rising unemployment. People were losing their jobs while costs were going up. Not a good thing. Sound familiar? To make matters worse, the country was in the middle of an energy crisis. I've heard stories, maybe you have, where oil prices had spiked, driven by geopolitical conflicts, which caused ripple effects throughout the economy. Maybe your parents or grandparents had told you about only being able to go to the gas station based on whether or not your license plate started or ended in an odd or even number. Imagine trying to run a business when fuel costs were skyrocketing, prices for everything going up, and consumer pullback and confidence was absolutely bottoming. Again, that's why the 9-day slide happened. Against that backdrop, in late 1978, the Dow dropped, as we keep on mentioning, 9 consecutive days. While a streak like that might not seem catastrophic now, even though we're going through it, back then it was completely unsettling. Investors panicked. But was it the start of a major market crash? Would inflation spiral even further out of control? And how long could businesses and consumers hold on in such an environment? It was a true moment of fear. When fear takes hold, what happens? Panic selling often follows. Sound familiar? We've seen it happen during events like the 2008 financial crisis, or even what we just went through almost 5 years ago during the COVID market dip 2020. But here's this twist. The 9-day streak didn't spell disaster. What happened next? After the slide, the market did what markets always do. It stabilized. While volatility remained, the Dow did not collapse into a long-term bear market. Instead, it started to rebound in the months that followed. Now let's be clear. The broader economic problems, high inflation, rising energy costs, and slow growth didn't go away overnight. The volatility continued into the early 1980s, and it took aggressive Federal Reserve under Volcker, and if you've been following the Fed, you're pretty much familiar with them, to finally beat inflation with sky-high interest rates, which did cause a short-term recession. But ultimately, those tough decisions laid the groundwork for the market to enter a massive bull run in the late 1980s. Long-term investors like ourselves who stayed the course during the late 1970s saw their patience rewarded. Ka-ching, ka-ching, ka-ching. So what can we take away from the 1978 downslide and what we've just gone through over the last 9 days? I think there are 3 key lessons that are just as relevant today as they were back then. 1, short-term declines are part of the game. 2, economic uncertainty is nothing new. We're always going to see it. We just need to be patient. And 3, rebounds happen when you least expect them. After a losing streak, it's easy to think this time it's different. The market will never recover. But history always shows us that the market goes down much faster than it goes up, but it always goes up more than it goes down. Here's a quick stat for you. If you had invested in the Dow at the beginning of 1978, despite all the volatility, you'd have seen a solid return by the time the 1980s bull market took off. Investors who stuck to their plan were rewarded. So I'll leave you with this. Next time the market dropped for a few days, or even a few weeks, remember the 1978 downslide? Short-term streaks don't define your long-term unfoolish success. Instead of panicking, ask yourself, has the world really changed overnight? Are businesses still creating value? Am I sticking to my plan as a long-term investor? Remember, history teaches us that markets are resilient even when times feel uncertain. It's staying calm, staying invested, and staying patient that makes all the difference. Thanks for tuning into this episode on Foolish Investing. A little bit of history on the 1978 slide. If you found today's episode helpful, share it with a friend who might be feeling a little nervous about the markets. Don't forget to hit like and subscribe button for more insights on how to invest wisely and unfoolish, or I should say, foolish decisions. Until next time, stay unfoolish, keep investing.